17 years old, sitting in a New York classroom, half listening to a maths teacher, and apparently worth $72 million. That's what the headline said. A teenage trading prodigy who'd quietly beaten Wall Street before he could even legally buy a pint. Sounds impossible, doesn't it? But for a brief moment, the world believed it. Before you get comfortable, let me know in the comments where you're listening from and what time it is. While you're at it, please like and subscribe, but only if you're genuinely enjoying these videos. Now then, how does a story like that even happen? It's the kind of claim that makes everyone stop scrolling. A 17-year-old called Mohammed Islam, from one of New York's most prestigious schools, supposedly turning penny stocks into millions. Not thousands, millions. The kind of wealth that makes adults feel slightly useless, and teenagers think, maybe I should start trading instead of doing homework. But there was one small problem. None of it was real. Not the $72 million, not the trades, not the miracle strategy that supposedly outsmarted Wall Street. What did exist was something far more interesting. A perfect storm of ambition, media hype, and the seductive simplicity of a number too good to check. Tonight, we're going to unpack that storm, how a teenage rumor became a global headline, how journalists got swept up in it, and why so many people wanted it to be true. Because underneath the headline is a story about modern business culture, about how stories of money spread faster than the truth that keeps them grounded. You'll see how the environment that raised Mohammed made it easy for fantasy and reality to blur, how social media and school gossip turned into public relations, and how one quiet interview shattered an illusion that had fooled billionaires, editors, and classmates alike. By the end, you'll understand not just what happened, but why it happened, why we love to believe in prodigies, shortcuts, and the promise that anyone can become a millionaire before they've finished puberty. It's a lesson in business psychology, media incentives, and the strange human habit of rewarding confidence over evidence. And perhaps most importantly, it's a gentle reminder that in business and in life, the easiest stories to believe are usually the ones we most want to be true. The kind of stories that feel so good you don't stop to ask for proof. Let's begin with the boy behind the myth, who he really was, before the headlines turned him into Wall Street's youngest genius. Before the headlines, before the supposed millions, there was just a bright teenager trying to make sense of the markets. Mohammed Islam wasn't a Wall Street insider or a mathematical prodigy from birth. He was a student at Stuyvesant High School in New York City, one of those places where ambition is practically a subject on the timetable. He was known for his curiosity about finance, for reading trading books at lunch, and for discussing stock tips with friends who barely understood what a stock was. He wasn't the first teenager to become obsessed with money, but what made his story different was how quickly that obsession found an audience. His name started floating around school corridors, attached to rumors of trading success that no one could quite verify, but everyone wanted to believe. At an age when most people are still learning to parallel park, Mohammed was apparently building a portfolio, or so it seemed. The truth, as we'll see, was far more complicated. But even at the start, his fascination with markets wasn't unusual. Teenagers who grow up in competitive schools often gravitate towards symbols of success, money, status, and any shortcut to both. Finance just happened to tick all three boxes. The environment around him mattered. Stuyvesant wasn't your average school. It was filled with high achievers whose casual conversations could sound like TED Talks. Everyone wanted an edge, the thing that made them stand out. So when someone claimed to be making serious money trading stocks between classes, it wasn't met with disbelief. It was met with admiration, because in that environment, success stories, however exaggerated, were social currency. And that's the strange part. Mohammed didn't have to prove anything. The idea of him being a trading genius was valuable enough on its own. It made sense of ambition that many students secretly shared. the wish to skip the slow climb to success and go straight to the top. If he could do it, maybe they could too. Nobody wanted to spoil the illusion. Then came the media, or more accurately, the perfect conditions for them. The story of a teenage millionaire wasn't just interesting, it was clickable. It had everything: youth, intellect, rebellion, and a neatly packaged number. And once a rumor like that meets the internet, it doesn't spread, it explodes. Before long, journalists were asking for interviews, profiles were being drafted, and the myth was on the move. It's easy to judge in hindsight, but this was a story designed to be believed. Every part of it fit a modern fairy tale template. Clever outsider beats the system, proves adults wrong, and does it all from a laptop. Never mind that there was no evidence. The story simply felt right. And in the attention economy, feeling right is often enough. What followed wasn't just a misunderstanding, it was a case study in how perception becomes profit. A school rumor about a teenage trader turned into one of the most famous false stories in modern finance. And to understand how, we need to go back to where it started: the boy himself, the world he lived in, and the first spark that turned curiosity into legend. Before the number, before the headlines and the disbelief, there was just Mohammed, a quiet, clever kid from Queens, born to Bangladeshi parents who valued education, respect, and the kind of steady success that comes from hard work. His upbringing wasn't flashy, it was typical of immigrant families who knew the value of effort and of wanting more. At school, he stood out for being curious rather than loud. Teachers described him as bright, polite, slightly shy, the sort of student who'd rather debate ideas than shout opinions. What made him different was his fascination with business and finance. While others scrolled through memes, Mohammed scrolled through stock charts. He didn't fully understand them at first, but that was part of the appeal. Money, to him, wasn't just about greed, it was about mastery, about understanding something adults treated as powerful and complicated. There's something intoxicating about that when you're young, to feel like you might have found a way into the adult world before you've even left school, especially when the world around you tells you that wealth equals intelligence. At Stuyvesant, that mindset was amplified. It wasn't a normal schoolyard competition. Success was measured in future potential: who'd interned where, who'd been published, who had a cousin on Wall Street. For a boy like Mohammed, already captivated by markets, it was the perfect environment to nurture both ambition and insecurity. Everyone wanted to stand out, and finance offered a way to do it fast. So he started small, reading forums, watching YouTube tutorials, joining investment clubs, learning the language of finance long before he could open an account of his own. He practiced paper trading, making mock trades with pretend money to see how he'd perform in real markets. It was educational, harmless, and exciting, until people started treating it as real. A few small wins on a simulation platform turned into stories told to classmates. Screenshots of hypothetical profits traveled through group chats. Before long, Mohammed was the guy who trades. His friends began to ask him for advice, and he started to believe in the image that others built around him. It's an easy trap. You tell one exaggerated story to impress, and suddenly it's your identity. The line between practicing and performing began to blur. He wasn't a con artist, just a teenager who'd found validation in being seen as exceptional. At that age, that's almost universal. The only difference was that his version involved fake trading accounts instead of football scores or exam results. The stakes just happened to be much higher. Every great financial story starts with belief. People believed in him at school because they wanted to. It made sense that one of their own might be the next prodigy. But belief, once it starts compounding, is hard to contain. The next stage of Mohammed's story would take his myth far beyond the classroom and straight into the heart of New York's teenage status culture. Stuyvesant High School wasn't just any school. It was a pressure cooker of talent, ambition, and teenage competition dressed up as intellectual pursuit. Students there weren't just aiming for good grades, they were auditioning for future success. Tech founders, hedge fund analysts, and Ivy League scholarships weren't daydreams, they were expectations. In that world, being exceptional wasn't rare, it was required. For teenagers surrounded by high achievers, standing out meant finding your niche. Some became debate champions, others maths prodigies. But Mohammed's niche was different. He wasn't winning tournaments or science fairs. He was the trader, the boy who supposedly turned after-school curiosity into a £1 million story. It was the kind of identity that carried social weight in a place obsessed with prestige. Inside those corridors, finance was glamorous. It symbolized intelligence, power, and maturity. Teenagers spoke about stock tickers the way others talked about football clubs, passionately, competitively, and with the occasional made-up statistic. The global financial crisis was still fresh in memory, yet the image of the slick young trader had already been rebranded as aspirational. Even the chaos of Wall Street seemed like a badge of courage. To many students, the markets felt like a game, one where the cleverest could win big without waiting for adulthood. Trading apps and YouTube gurus made it look effortless. You didn't need a suit, an office, or experience, just confidence and Wi-Fi. So, when someone like Mohammed claimed to have mastered that world, it fitted perfectly into the school's mythology of early success. He became a quiet celebrity. Friends whispered his name in hallways, new students heard rumors before meeting him, and teachers likely knew without ever acknowledging it. People admired him, not for what they could prove, but for what they wanted to believe. That someone their age could already be playing the adult game and winning. It was the teenage version of fake it till you make it. Only no one realized the fake part yet. The school's social ecosystem magnified everything. Being impressive wasn't just a personality trait, it was social currency. At a place like Stuyvesant, where intellect was the main form of popularity, saying you'd made millions wasn't bragging, it was marketing. Mohammed's story didn't need confirmation, it needed an audience, and he had one ready and waiting. Of course, no one really questioned the logistics. How does a 17-year-old trade with restricted accounts? Where's the money stored? How did he pass regulatory checks? Those questions ruin a good story. And no one wanted that, because the story itself, a kid outsmarting Wall Street, felt too satisfying to spoil with boring details. Teenagers rarely fact-check their fantasies. And so his legend grew quietly, fueled by whispers, admiration, and the subtle competition that made everyone want a story like his own. What started as a simple curiosity about trading had turned into a reputation. The next step would turn that reputation into something much larger. A headline number so bold it could no longer stay within the school walls. It started, as most modern myths do, with a small throwaway number. A casual exaggeration told among friends, repeated, reshaped, and refined until it took on a life of its own. At first, Mohammed's supposed profits were modest. A few thousand here, a few more there. Enough to impress classmates, but not enough to raise eyebrows outside of school walls. Over time, though, the figures grew. Someone said he'd made 10,000, another swore it was 100. The more the story traveled, the more zeros appeared. It wasn't malicious, it was social inflation, like a rumor that earns interest every time it's repeated. By the time it left the school grounds, the number had stopped making sense entirely. 72 million. Why that number? No one really knows. It just sounded right. The detail made it believable. Rumors rarely survive without specifics, so people added them. The name of a broker here, a stock ticker there. Someone claimed to have seen screenshots of a trading account. Another said he'd seen proof on Mohammed's laptop during lunch. None of it could be verified, but each detail made the story stronger. In finance, confidence is often mistaken for credibility. Penny stocks became the supposed secret weapon, low-priced shares that can double or collapse in a day. The idea that a teenager could have mastered them felt daring, rebellious even. In reality, they're closer to gambling than investing. The market for them is thin, the swings are wild, and the chance of consistent success is almost zero. But no one wanted to hear that part. It was too boring for the legend. Some classmates genuinely believed the number, others didn't, but went along with it anyway. It was more fun that way. The story gave them bragging rights. The next Wolf of Wall Street goes to our school. There's a certain comfort in knowing someone near you might have cracked the system. Even if it's nonsense, it's collective nonsense. And that's powerful. Outside of school, the tale began to leak into social circles. Older students, family friends, people connected to finance, all curious about the teenage trader. And with each retelling, the myth sounded more professional, more refined. It went from a kid who trades to a young investor managing serious money. Once adults started repeating it, it gained legitimacy. Because if grown-ups believed it, why would a teenager doubt it? No one stopped to ask the simplest question. If he really had made $72 million, why was he still going to school? Why wasn't he on a beach somewhere, or at least buying the building? But that's the thing about big numbers. They suspend logic. People don't analyze them, they admire them. And in a world obsessed with success stories, a teenager with millions was irresistible. The $72 million claim was now unstoppable. It had grown beyond Mohammed's control, a Frankenstein made of half-truths, flattery, and assumption. All it needed was one spark from the outside world, one journalist hungry for a headline, and the story would leave the school gates forever. What started as gossip was about to become global news. To understand how Mohammed's story seemed believable, you have to understand the tools that made it possible: penny stocks and paper trading. Both sound harmless, even educational, but when combined with ego and inexperience, they can blur the line between practicing and pretending. They create the illusion of wealth before there's even a real pound or dollar on the line. Penny stocks are shares in small companies that trade at very low prices, often less than a pound or a dollar each. They usually belong to businesses you've never heard of, tiny mining firms, biotech startups, or companies with exciting ideas but very little track record. The appeal is obvious. If a 10-pence stock doubles to 20 pence, you've made 100%. But that's also the danger. What goes up can vanish just as fast. These stocks are lightly regulated and thinly traded, meaning there aren't many buyers or sellers. That makes prices easy to manipulate. A single rumor, tweet, or forum post can push them up or down dramatically. To an untrained eye, that volatility looks like opportunity. To an experienced investor, it looks like chaos. You don't need to be a professional to gamble, but you do to survive it. Paper trading, on the other hand, is like fantasy football for the stock market. You make fake trades using real market data to see how you'd perform if you were investing actual money. It's a brilliant way to learn. You can test strategies, learn how markets move, and track your portfolio without risking a penny. The issue arises when people start treating those fake results as real proof of skill. In paper trading, you can make hundreds of hypothetical trades instantly, rewind time, or buy in and out at perfect moments without the pressure of emotion. In the real world, your nerves, timing, and fees destroy that perfection. But screenshots of profits look identical either way. To a casual observer, it's impossible to tell whether a gain was real or virtual. That's how myths are born. Mohammed's rumored millions likely began with simulations, test runs that went right on paper. And to be fair, he wasn't the first person to get lost in the illusion. The human brain reacts to pretend money almost like real money. The dopamine spike feels the same. When you're a teenager, that's all the validation you need. The mistake comes when you start believing the simulation reflects reality. This confusion is common among beginners. The stock market rewards optimism right up until it punishes it. Small paper gains can convince you that you've cracked the code, that your system works. But in truth, trading is as much about managing losses as chasing wins. The simulations skip that part. They don't teach you what happens when your confidence meets a real margin call. So when Mohammed's supposed success spread, it didn't sound impossible. The maths of penny stocks, combined with screenshots from paper trading, looked plausible enough to fool almost anyone. Classmates, teachers, even journalists. What began as an experiment had become a narrative, and the psychology behind it, ambition, identity, and the craving for validation, would take the story somewhere much bigger. At the center of Muhammad's story wasn't malice or greed, it was ambition, the kind that burns bright in teenagers who haven't yet been introduced to the idea of limits. He wanted to be special, respected, and independent. Those are all normal goals. But in a world obsessed with shortcuts, the fastest path to all three seemed to be money. Money isn't just a number, especially for young people, it's proof. Proof that you're clever enough to outsmart a system that adults seem to overcomplicate. Proof that you can compete with people twice your age and win. It's no coincidence that so many young traders, influencers, and entrepreneurs share the same motivation. They don't just want success, they want validation. And validation in the digital age arrives in real time. Likes, comments, reposts, and praise all work like a currency of their own. When people start calling you the trader or the genius, it's addictive. You begin to live for the label, and the higher that image rises, the harder it becomes to correct it, because admitting exaggeration feels like losing value in your own stock. Mohammed wasn't alone in that trap. Teenagers grow up in an economy of visibility, one where being seen matters as much as being skilled. It's why influencers post luxury lifestyles that don't always belong to them, and why every young entrepreneur has a £1 million idea. The line between aspiration and performance has thinned so much that even adults struggle to tell the difference. That's what made his story so believable. A teenager who'd found a secret to wealth felt like the ultimate expression of modern ambition. People didn't stop to ask questions because the story confirmed something they wanted to believe, that success can be hacked, that the system is beatable, and that youth itself can be a business advantage. It was inspiring in a slightly delusional way. At that age, identity and achievement often get tangled. When people recognize you for one thing, you start building your personality around it. Mohammed became the kid who trades, so the pressure to live up to that name grew. Every conversation, every whisper, every mention added another layer to the character he was expected to play. The performance began writing itself. There's also the problem of escalation. Once you're known for success, you can't suddenly claim average results. So you double down. You tell a bigger story next time. You start justifying exaggerations as motivation. It's the same psychology that fuels market bubbles. Everyone keeps pretending it's fine until the numbers get ridiculous. Then the crash comes, both personal and public. Mohammed's ambition wasn't unusual. It was just amplified by the environment around him. A mix of school competition, digital attention, and cultural obsession with quick wealth turned his learning experiment into a legend. But legends attract more than gossip. They attract belief. And soon, his story would leave the corridors of Stuyvesant and land in the inbox of a journalist looking for the next big headline. By the end of 2014, Mohammed's name had traveled far beyond Stuyvesant's corridors. What began as harmless school gossip was now circulating among adults who should have known better. In a city obsessed with success stories, a teenage trading prodigy was irresistible. A boy who'd supposedly made $72 million from penny stocks. That wasn't just a rumor anymore. It was a headline waiting to happen. At first, the attention came quietly. A friend of a friend passed along Mohammed's name to someone working in media. A few journalists started whispering about a financial genius still in high school. It didn't take long for the story to find its way into the orbit of a glossy New York magazine known for its sharp profiles and trend-chasing features. They wanted to meet him. They wanted proof. But here's the thing. Proof isn't always the priority in stories like this. The allure of being first often beats the need to be right. Editors love a perfect headline. Teen trader makes millions. It's clean, clickable, and flattering to every reader who secretly wishes they'd done the same. Add a photo of a shy young man in a blazer, and you've got the perfect myth for a restless city. For Mohammed, the attention was both thrilling and terrifying. On one hand, it was validation. The world was finally seeing what his schoolmates had seen. On the other, he knew deep down that the numbers weren't real. But when journalists with notebooks and microphones start treating you like a prodigy, it becomes harder to correct them. Admitting the truth feels like killing your own opportunity. He met with writers, answered questions vaguely, and let them fill in the blanks. They asked how much he'd made. He didn't lie outright. He just didn't deny what they'd already heard. He'd talk about simulated trading, learning strategies, and building a portfolio. But to a journalist desperate for a scoop, those words sounded like confirmation. Ambiguity became agreement. Silence became evidence. This is how modern myths evolve. They don't explode overnight. They expand gradually through assumption. Each person in the chain adds a detail, interprets a pause, or rounds up a number. One journalist assumes another has verified it, one editor assumes their writer has seen the proof, and the rumor walks out wearing a suit labeled fact. It's not deceit so much as collective carelessness. By the time the article was drafted, the story had shape, tone, and imagery. A bright student from Queens, quietly amassing a fortune on his laptop between classes. The magazine's photographer captured him gazing out a cafe window, milkshake in hand. The image of youthful brilliance and quiet wealth. Ironically, it would become one of the most recognizable photos of a story that was entirely untrue. The stage was now fully set. Mohammed's legend was about to graduate from school gossip to international news. All it would take was one publication to hit publish, and the entire world would believe that a 17-year-old had outsmarted Wall Street. The rumor had escaped its cage, and no one, least of all Mohammed, was ready for what came next. The story that would eventually make global headlines started the same way many modern scandals do, with an email. A well-worded, confident message sent to a journalist offering an exclusive about a teenage trading prodigy making millions on Wall Street. It sounded too good to ignore. And in journalism, too good to ignore is often where caution quietly leaves the room. The person who first pitched it wasn't necessarily lying. They just didn't have the full picture. Rumors had circulated for weeks, passed from one ambitious young networker to another until they reached someone with media connections. When that person described Mohammed to a reporter, the numbers had already grown, the edges already polished. By the time it reached the newsroom, it looked like a ready-made success story. The pitch hit every note that journalists dream of: youth, intelligence, risk, and the romantic idea of beating the system. It was a headline you could almost see before writing it. Teen trader makes $72 million. Add the New York skyline, a milkshake for charm, and you've got a viral story before it's even been checked. And in December, when newsrooms are desperate for upbeat features, that kind of story is gold. When the magazine reached out to Mohammed, he was flattered. The same validation that had fueled the rumors was now coming from professionals. For a 17-year-old, that kind of attention feels like proof that you've made it. He agreed to meet the reporters, not quite realizing that this was the point of no return. What had been a school legend was about to be recorded, quoted, and immortalized. The journalists asked straightforward questions: how he'd started, how he learned, what his strategy was. Mohammed's answers were vague but confident. He talked about paper trading, momentum, and risk management. To anyone who'd never traded, it sounded impressive. To someone who had, it was fluff. But in interviews, tone often matters more than truth. He seemed calm, intelligent, and credible, which is all that really counts when your story fits the narrative people want to hear. And that narrative was irresistible. The boy who beat Wall Street from his bedroom, the teenage genius who'd cracked the code adults couldn't. It was uplifting, clever, and marketable. The journalist didn't demand bank statements or tax records, perhaps because asking for those might ruin a great story. Verification is rarely exciting. Myth-making, on the other hand, sells copies. It's worth saying, most journalists don't intend to get things wrong, but they live in an environment where speed and novelty pay better than patience. You can spend a week checking a fact no one cares about, or publish a viral headline in an afternoon. The temptation is obvious, and this pitch was tailor-made for it. The perfect cocktail of hope, novelty, and just enough detail to feel plausible. By the time the interview was over, the article was practically written. The quotes were flattering, the headline was irresistible, and the legend of the 17-year-old millionaire had become official. No one had seen his brokerage account, but everyone had seen his potential. And in media, that's often enough. The next step would test just how little proof the world really needs before it believes. When the magazine ran its story on Mohammed, it presented him as a verified success, a teenage investor who'd quietly built a fortune, waiting to be discovered. But here's the strange part. Almost none of it was actually verified. There were no brokerage statements, no tax records, no third-party confirmation. Just confidence, a few quotes, and one neatly staged photo. Verification in journalism isn't complicated. If someone claims to have made millions from trading, there are a few standard checks. You ask for proof of trades, official account summaries, or statements from a broker. You cross-check the timeline, confirm details with family or teachers, and compare what's said privately with what's said publicly. Simple stuff. But in this case, almost all of that was skipped. The reporters said they'd seen proof, but that proof turned out to be vague. It might have been a screenshot, a spreadsheet, or simply Mohammed's word. Whatever it wasn't independently verified. A real journalist will tell you that "I've seen it" is not the same as "it's real." One is an impression, the other is a fact. Somewhere between those two, this story took a wrong turn. In fairness, journalists face enormous pressure to publish fast. Fact-checking is time-consuming, and editors love certainty more than they love nuance. Add to that the December publishing rush, when every outlet is desperate for a headline, and you've got a perfect environment for a small oversight to snowball into a global embarrassment. Accuracy moves slowly, virality doesn't. Part of the confusion also came from language. Phrases like reportedly, said to have, and believed to be can make fiction sound like fact without technically lying. It's how publications protect themselves, legally, if not morally. Readers rarely notice those qualifiers. They just see the big number and the glossy image. The small print of truth gets lost under the weight of a good story. There's also the bias of trust. Mohammed wasn't a typical source. He was young, polite, and visibly nervous. That makes people lower their guard. Journalists are used to interviewing power-hungry executives, not teenagers from Queens. When someone seems genuine, they often get the benefit of the doubt. Ironically, that honesty makes the lie, or half-truth, easier to believe. The result was an article built on foundations of sand. One impressive headline, a few confident quotes, and zero documentation. No one at the magazine stopped to ask why a teenager with $72 million still needed to worry about homework. No one demanded receipts. It was a masterclass in how a single missing question can unravel the whole idea of truth. Extraordinary claims don't need extraordinary intelligence to believe, just ordinary laziness to overlook. And in the rush to be first, the basics of journalism were quietly ignored. The next chapter of Mohammed's story would show what happens when those skipped steps come back to haunt everyone involved, from the teenager at the center to the newsroom that made him famous. To understand why Mohammed's story made it to print, you have to understand the business model of modern media. It's not just about information anymore, it's about attention, and attention pays the bills. In a newsroom that lives and dies by page views, the $72 million teenager wasn't just a story. He was a jackpot, a perfect storm of clicks, curiosity, and cultural envy. The financial press used to move slowly, driven by verification and trust, but digital publishing changed everything. Every article is now a race, not for accuracy but for speed. Whoever breaks the story first wins the traffic, and traffic equals advertising money. Editors may talk about journalistic integrity, but analytics dashboards are the real bosses. You can't fact-check a rumor when you're watching it go viral. The incentives are simple. Stories that surprise, shock, or flatter the reader rise to the top. And few stories do that better than the teenage prodigy trope. It's the perfect blend of youth, genius, and fantasy. It reassures adults that potential still exists in the world and gives teenagers something to aspire to. It's hope repackaged as a headline. And hope, unfortunately, doesn't require proof. Journalists, for the most part, aren't villains. They're people working under impossible deadlines, often for modest pay, being told to produce constant novelty. Every click, every share, every trending post is a data point that affects their value. So when a story like Mohammed's appears, full of drama and optimism, it's easier to write it than to kill it. Killing it means lost traffic. Publishing it means a temporary win. It's also about prestige. Being the outlet that discovers a future billionaire is a PR goldmine. Every other publication copies your scoop, referencing your name and linking to your article. It's a multiplier effect. One story becomes 50. In that echo chamber, truth matters less than origin. Once you've set the narrative, everyone else becomes part of your distribution network. The culture of news has quietly shifted from being about accuracy to being about amplification. A good correction will reach a few thousand readers. A good headline will reach millions. You can probably guess which one the business model rewards. Verification is costly, virality is free. And that trade-off is at the heart of how stories like this slip through. It's the same logic that drives social media. Reward engagement, not credibility. The same algorithms that push viral memes also push inspirational headlines about teenage millionaires. The difference is that one makes you laugh and the other makes you believe something that isn't true. Either way, the system profits. The audience just feels smarter for clicking. Mohammed's story was a perfect product for that environment. Clean, emotional, and almost impossible to verify quickly. Once published, it spread through news feeds, group chats, and investor forums at light speed. The incentives worked exactly as designed, and in a matter of hours, a teenage rumor had become a global fact. The world was now watching and believing. Once the article went live, the effect was immediate. Within hours, Mohammed's face and that now famous milkshake photo were everywhere. Social media platforms, news aggregators, and financial blogs all joined in. Each repost stripped away a little nuance, leaving only the irresistible headline, "Teen makes $72 million trading stocks." A modern fairy tale trimmed for maximum shareability. Social proof kicked in almost instantly. The more people who saw the story, the more legitimate it seemed. That's how credibility works online, not through evidence, but through repetition. If something appears on enough verified accounts, it must be true. It's the digital version of seeing a long queue outside a restaurant and assuming the food must be good. The queue creates its own reality. At school, Mohammed's status skyrocketed. Students who'd never spoken to him suddenly wanted to. Classmates quoted the article like scripture, proud that their school had produced a millionaire. Teachers and administrators, caught between disbelief and pride, didn't quite know how to respond. Nobody wanted to challenge the story too early in case it turned out to be true. Meanwhile, older figures, investors, mentors, even a few minor celebrities, began circling. Everyone wanted to meet the kid who beat Wall Street. Invitations arrived for panels, TV segments, and finance events. It was as if the world had collectively agreed that a 17-year-old had discovered a market secret everyone else had missed. Nobody stopped to ask how a miner had opened a brokerage account large enough to make those trades. Social media only added fuel. On platforms obsessed with rags to riches stories, Mohammed's narrative fitted perfectly. Young, driven, self-taught. It was the dream condensed into a single number. His name became shorthand for possibility. Teenagers wanted to copy him. Traders wanted to mentor him. Brands wanted to be associated with him. When attention compounds, it grows faster than any stock ever could. But there's a darker side to social proof. Once enough respected people endorse something, doubt feels like bad manners. Questioning the story becomes an act of cynicism rather than logic. This is how misinformation gains momentum, not through deception, but through enthusiasm. Everyone wants to be early to a success story, even if the story isn't real. Even the adults who should have known better played along. Some saw a potential protege. Others saw headlines, investment opportunities, or simple bragging rights. In business, proximity to perceived genius has its own currency. And if that genius turned out to be a fraud, well, at least they'd been part of the buzz. Reputational risk is easily forgotten when attention feels like reward. The legend of Mohammed Islam wasn't just a story about one teenager. It was about how quickly collective belief can outpace reality. The myth had grown too large, too quickly, and the world had invested in it emotionally. But the higher a rumor climbs, the harder it falls, and the first cracks were already starting to show. Once the story took off, it stopped belonging to Mohammed. It became public property, a shared fantasy that everyone wanted a piece of. Journalists from around the world started calling. Television producers sent invitations. Even investment firms wanted meetings. Within days, a rumor that began in a high school lunchroom had turned into one of the most talked about finance stories of the year. Every outlet wanted to add its own twist. Some described him as a financial prodigy, others as a mystery millionaire. Each retelling made the legend cleaner, sharper, more cinematic. It was no longer about a teenager who might have exaggerated his success. It was about a boy genius outsmarting the adults. The story had evolved from curiosity into entertainment, and truth was now an optional extra. Mohammed's inbox exploded. Messages poured in from reporters, classmates, and total strangers. Some wanted interviews, others wanted advice, a few wanted investment tips. There were even offers of mentorships and television appearances. For a moment, he became exactly what the world had imagined, a brand. But behind the sudden fame was panic. Every question about proof felt like a trap he couldn't escape. Meanwhile, the media cycle was feeding itself. Each new publication cited the previous one as evidence, forming an endless chain of self-referential sources. No one went back to check the facts, because everyone assumed someone else already had. It was a perfect feedback loop, a rumor validated by repetition. It's how misinformation evolves from gossip to gospel. The attention brought confusion as well as excitement. Mohammed had become a symbol of everything people wanted to believe about youth and success. Quick wins, self-taught genius, overnight wealth. To the adults, he was a prodigy. To his peers, a kind of folk hero. But the higher a myth climbs, the thinner the air becomes, and he was running out of room to breathe. As interviews piled up, inconsistencies began to show. Different journalists got slightly different stories. New numbers, new trading strategies, vague timelines. The myth was mutating faster than he could manage it. A few finance professionals began to notice the cracks. The maths didn't add up, and neither did the logistics. How could a 17-year-old trade restricted stocks with that kind of capital? For the first time, the tone started to shift. What had been flattery became curiosity, and curiosity quickly turned into doubt. A handful of reporters began making quiet calls to brokers, to regulators, even to his school. They weren't looking for confirmation anymore. They were looking for holes. And the holes, once seen, were impossible to ignore. The snowball that had rolled effortlessly downhill was starting to wobble. The same speed that made the myth grow would now make it unravel. All it took was one skeptical question, one follow-up email, for the entire fantasy to start collapsing in real time. The world that had once applauded was now sharpening its pencils, ready for the reckoning. The signs that something wasn't quite right were there all along. Small details that didn't add up, quietly hiding in plain sight. The first red flag was the number itself. $72 million. It sounded precise enough to seem real, but round enough to feel invented. Real traders rarely speak in neat numbers. It was the kind of figure chosen for impact, not accuracy. Then there was the question of logistics. To trade at that scale, Mohammed would have needed a brokerage account capable of handling millions in capital, strict identification checks, and oversight under US regulations. At 17, he was legally too young to meet those requirements. But somehow, that small legal fact was lost amid the excitement. No one paused to ask how a miner was supposedly executing multi-million-dollar trades. His supposed strategy raised more eyebrows among professionals. Penny stocks, the ones he was rumored to have mastered, aren't exactly the playground of serious investors. They're risky, thinly traded, and largely avoided by institutional money. Making $72 million from them would be statistically extraordinary. And yet, the story breezed past that detail as if it were merely a charming quirk of genius. There were also inconsistencies between versions of the story. Some reports said he traded on his lunch break. Others claimed he used after-hours markets. Some mentioned mentors from investment firms. Others didn't. A few even placed him in contact with hedge fund managers, who later denied ever meeting him. Like most myths, the story's success relied on no one reading all the versions at once. Another red flag was his response to specific questions. When asked how he managed such rapid returns, he'd talk about momentum and intuition, concepts that sound intelligent until you realize they explain nothing. Real traders talk in data, not philosophy, but journalists, more interested in personality than process, took vague statements as wisdom. He sounded convincing enough, which was all that mattered. Even the famous photograph carried clues. In it, Mohammed sits in a Manhattan diner, milkshake in hand, dressed neatly in a suit. It looked expensive, deliberate, staged, a visual narrative of wealth. Yet that same photo was taken before anyone had verified a single financial record. It wasn't evidence. It was decoration. The image became proof simply because people wanted it to be. Among professionals, doubts began to grow quietly. Market analysts and bloggers started doing the maths, pointing out the improbability of turning a small account into tens of millions in under a year. But the noise of the story drowned them out. In the attention economy, skeptics rarely go viral. Optimists do, especially when their optimism comes with a dollar sign. It was only a matter of time before someone finally decided to check properly. The story's inconsistencies had reached a point where even casual readers noticed them. What had begun as gossip and grown into gospel was now being tested like a financial audit. The storm that built Muhammad's legend was about to start dismantling it, piece by piece. When the first skeptical questions surfaced, they didn't come from rival journalists or cynical adults. They came from traders, real ones, who'd seen enough markets to know what was possible and what wasn't. They started doing what the original reporters hadn't, asking for receipts. Screenshots weren't enough anymore. They wanted account statements, trade confirmations, timestamps, anything that proved the money existed. The problem was, there were none. Mohammed couldn't produce verified records because there weren't any to show. The profits he'd claimed had been theoretical, simulated through paper trading platforms. The trades existed only as numbers on a screen, not as withdrawals, deposits, or tax filings. To anyone who'd ever traded, that distinction was massive. To everyone else, it sounded like an excuse. Soon, financial journalists from other outlets began calling the supposed brokerage firms linked to his story. None of them had heard of him. There were no client records under his name. In a single afternoon, the entire structure of the myth began to collapse. Every unanswered question from the original profile was now a hole big enough to drive a truck through. The fairy tale was unraveling at the same speed it had spread. The media machine that had built him up now started turning on him. Follow-up articles appeared within days, this time filled with doubt instead of praise. "Did the $72 million teen really exist?" asked one. Another headline read, "Too good to be true," which, of course, it was. In the space of a week, Mohammed had gone from prodigy to punchline. The same journalists who had chased him were now dissecting him. At school, things shifted too. Admiration turned to awkward silence. Friends who once bragged about knowing him began to keep their distance. The same social networks that had amplified his fame now magnified his humiliation. That's the thing about the internet. It doesn't just spread success fast, it spreads failure even faster. The only thing compounding now was disbelief. His story became a lesson in how quickly perception changes once evidence is demanded. People who'd never doubted him suddenly became forensic accountants overnight. Everyone wanted to claim they'd always been suspicious. It's a classic human reflex. No one likes admitting they were fooled. Ironically, the only person not pretending to be an expert was Mohammed himself. He just went quiet. The moment of truth came when other reporters, determined to verify the story properly, reached out to him again. This time, he didn't show up with confidence or polished lines about momentum and strategy. He showed up nervous, guarded, and accompanied by lawyers. The performance was over. It was time to explain what had really happened and what hadn't. What followed wasn't a dramatic confession, but something smaller. A reluctant acknowledgement that the myth had gone too far. He hadn't meant to deceive anyone, he said. It had started as exaggeration, then snowballed into fiction. But now, with cameras waiting and credibility gone, he was facing the cost of letting ambition outrun truth. The next chapter would make that painfully public. When the truth finally came out, it wasn't through a dramatic press conference or a Hollywood-style breakdown. It came through a cautious, lawyer-approved statement delivered to the same media that had built the myth. Mohammed, sitting alongside his attorney, quietly admitted what everyone had already begun to suspect. The $72 million never existed. Not in an account, not on paper, not anywhere. The confession was phrased delicately. Words like misunderstanding and exaggeration softened the reality of what had happened. He hadn't traded with real money, he explained. It was all simulated. Paper trading, theoretical profits. He hadn't intended to deceive. The story had simply gotten out of hand. A polite way of saying he'd let people believe what they wanted to, because it felt good to be believed. For the journalists who had run the original story, the statement was mortifying. They'd fallen for a rumor that a few minutes of due diligence could have disproved. The retraction hit the internet quickly, framed as an update rather than an apology. No publication ever says, "We messed up." They prefer, "New information has come to light." It sounds cleaner that way. Mohammed's lawyer did most of the talking. Every sentence seemed written to minimize damage, legally precise, emotionally distant. There was no grand emotional outburst, no tearful confession, just a quiet dismantling of a lie that had already fallen apart. The tone said it all. A teenager had been out of his depth, and now the adults were here to tidy up. It's easy to imagine how surreal that must have felt. One week, he was the genius who'd beaten Wall Street. The next, he was sitting next to a lawyer explaining how he hadn't even placed a trade. His name had gone from symbol of possibility to cautionary tale overnight. A strange kind of fame. The kind you'd pay not to have. Some people online sympathized, calling him naive rather than dishonest. Others weren't so kind. Comment sections filled with ridicule, memes, and armchair morality lessons. It's remarkable how quickly the internet transforms empathy into entertainment. The same people who once celebrated his success now queued up to lecture him about integrity. Social media doesn't forgive, it just gets bored and moves on. For Mohammed, the confession wasn't just a public act, it was a personal collapse. The image he'd built, the admiration he'd enjoyed, the validation he'd chased, all of it disappeared in a single afternoon. What remained was the uncomfortable truth that a fantasy, once made public, can't be retracted quietly. Once your story belongs to the internet, it's no longer yours to control. That moment marked the end of the performance, but not the end of the consequences. The world had moved from believing to mocking, from admiration to scrutiny. And as the headlines began to fade, Mohammed was left to face the fallout privately, with his school, his family, and the media still circling for one final quote. Once the confession went public, everyone involved scrambled to contain the damage. The media that had once celebrated Mohammed now turned inward, issuing carefully worded clarifications. Headlines shifted tone overnight, replacing words like prodigy with hoax. For a brief moment, the same journalists who had built him up seemed shocked that a story built on rumor had fallen apart when tested by reality. At home, the situation was far more serious. Mohammed's parents, who had believed their son's reputation as a young trader, were now left to face a global wave of ridicule. Imagine finding out that your teenage child has been labeled a fraud in newspapers across the world. They weren't angry so much as heartbroken. They had come to the United States chasing opportunity, not scandal. The family withdrew from public view almost immediately. Media crews appeared outside their queen's apartment, shouting questions that no parent should have to answer. Statements were released through lawyers instead of conversations. Mohammed's mother reportedly asked people to leave her son alone, that he was still a child. It was an uncomfortable reminder that while the story had been entertaining for many, it was traumatic for those living it. At school, administrators had a balancing act to perform. On one hand, they needed to protect a student from media intrusion. On the other, they had to manage the reputation of an elite institution suddenly associated with deceit. Officially, Stuyvesant High School refused to comment on the details. Unofficially, staff urged students to keep their distance from reporters, advice that most ignored, of course. Classmates, too, were split in their reactions. Some mocked him, sharing memes and jokes online. Others quietly sympathized, seeing in him not a liar, but a cautionary tale. He wasn't the only teenager to chase validation. He was just the one who got caught doing it publicly. As one student later said, "Everyone exaggerates at Stuyvesant. He just went viral." It was cruel but true. In the media world, the episode triggered a short-lived wave of introspection. Editorial meetings were held, Fact-checking policies were revisited. Reporters admitted, privately at least, that they'd been blinded by the appeal of a perfect headline. But introspection doesn't generate traffic. Within a week, the conversation had already shifted to the next trending scandal. The news cycle moved on. The consequences stayed behind. For Mohammed, the aftermath meant silence. His lawyer advised him not to speak to anyone, and for the first time in months, he obeyed. The same platforms that had amplified his fame now served as archives of his humiliation. Every search result, every screenshot, every archived article ensured that his mistake would never fully disappear. In the digital age, there's no such thing as temporary infamy. The story had ended publicly, but privately it was only beginning. His family was left to rebuild trust. His school had to restore its image, and journalists had to quietly pretend they'd learned something. It was a sobering chapter for everyone involved. A modern fable about truth, ambition, and the cost of believing your own headlines. But for Mohammed, the next stage wasn't about others anymore. It was about survival. The aftermath of the scandal didn't just end with embarrassment. It lingered quietly, shaping every part of Mohammed's future. There were no criminal charges, no official punishments. Lying to journalists isn't illegal, but reputational damage, that's permanent. The world of finance may forgive risk, but it rarely forgives deceit, even when the deceit began as exaggeration rather than malice. Universities that once would have welcomed a student like Mohammed now hesitated. His name had become a digital footprint that couldn't be scrubbed. Every scholarship application, every internship, every background search led back to the same three words: teenage trading hoax. It's a reminder of the modern truth. Your online reputation often lasts longer than your mistakes deserve to. There were rumors that he tried to start afresh at a new school, even rumors of studying finance at university later on. Whether true or not, the perception of him never completely disappeared. People remembered the headline, not the correction. That's the curse of fame in the digital age. Stories are archived, searchable, and endlessly repeatable. Forgiveness might be human, but Google isn't. From a legal standpoint, Mohammed had skirted danger. If he'd actually handled real money or misled investors, it could have become a case of fraud. But since the story was built on words rather than transactions, there was nothing to prosecute. The only courtroom he faced was public opinion, and that's the harshest one of all because it never officially closes. For his family, the damage was quieter but deeper. Their son had become a global lesson in media gullibility, and they had to watch it unfold powerlessly. They weren't wealthy or connected. They couldn't hire publicists or crisis managers. They just had to endure the headlines. It was a sobering reminder that when a story goes viral, everyone in it becomes collateral. And yet, time has a strange way of softening public memory. Within a few years, new scandals replaced his. The internet had found fresh prodigies to idolize, and inevitably, to doubt. For Mohammed, that fading attention was both a curse and a blessing. The mockery stopped, but so did the relevance. The boy who once symbolized genius now symbolized caution. There's an odd kind of freedom in that, though. When your reputation collapses so completely, there's nothing left to defend. Some people rebuild quietly from that place. New identity, new goals, new humility. If he learned anything from the ordeal, it was likely that credibility is a slow asset to grow and a fast one to lose. Fame compounds faster than trust ever can. By the time the dust settled, Mohammed wasn't a headline anymore. He was just a young man trying to move forward with a past he couldn't quite outrun. His story had become a cautionary tale not just for dreamers, but for journalists, investors, and anyone tempted by shortcuts to status. The next step was learning, not just for him, but for everyone who'd believed the myth. Once the noise faded, the story of Mohammed Islam became less about one boy and more about the world that believed in him. His lie was small. The reaction to it was enormous. What it revealed was uncomfortable, that the boundary between journalism, entertainment, and marketing had become almost impossible to see. A myth doesn't need truth anymore, it just needs traction. In a way, Muhammad's story was a mirror. It reflected a culture obsessed with fast success, viral fame, and simple narratives. The teenager who beat Wall Street was never the real focus. The real star was the idea of instant genius, the fantasy that with enough confidence and Wi-Fi, anyone could outsmart the system. We didn't want evidence, we wanted inspiration, and we got it, briefly. For the media, it was a painful lesson in incentives. Clicks and credibility don't always coexist peacefully. The more the internet rewards speed, the less room there is for accuracy. Verification doesn't trend, outrage does. So even respectable outlets are forced to compete, using the same tactics as gossip blogs, catchy headlines, emotional hooks, and stories too good to check. Financial journalism, in particular, thrives on the idea of exceptional individuals. People who can outthink markets, predict crises, or make fortunes from nothing. Muhammad fitted that mold perfectly. The fact that he was a teenager made it even better. His story reinforced the comforting illusion that success is a personality trait rather than a process. That myth sells more easily than the truth. The markets themselves operate in a similar way. Stocks rise not just on performance, but on perception, on hype, confidence, and belief. Investors buy stories as much as they buy assets. In that sense, the $72 million rumor wasn't that different from a speculative bubble. It was an asset built entirely on faith, and it crashed the moment belief dried up. The audience too played a part. Readers wanted to believe in him because it was entertaining. It offered a shortcut to hope, proof that brilliance could emerge anywhere, even from a school library. It's easier to celebrate a prodigy than to accept that wealth usually comes from slow, often boring work. The media simply gave people the illusion they were craving. It also revealed how much the internet confuses exposure with expertise. A viral story can transform anyone into an authority overnight. Followers replace credentials, retweets replace verification, and charisma becomes currency. Muhammad didn't invent that system. He just stumbled into it before he was ready. And once it embraced him, it didn't know how to let go. In the end, the scandal wasn't about deception. It was about desperation. The media's desperation for stories, the public's desperation for miracles, and a teenager's desperation to matter. It was a reminder that markets, like media, are powered by belief, and belief, no matter how profitable it seems, is still the most volatile investment of all. The story of Mohammed Islam, once stripped of its spectacle, leaves behind a simple lesson. Credibility is a currency, and it's the hardest one to earn back once you've spent it foolishly. For a teenager, that's a heavy truth to learn. But in a world where reputation compounds faster than facts, it's one of the few lessons worth remembering. Credibility isn't about sounding confident or looking successful. It's about consistency. The slow, sometimes boring process of being accurate, even when exaggeration is easier. Muhammad's mistake wasn't just claiming something false. It was assuming that reputation could be built like a headline. But real credibility doesn't work like virality. It's earned privately, lost publicly, and never truly reset. The media too paid a price in credibility. Every publication that ran with his story became part of the problem. Readers stopped trusting their judgment, and journalists became defensive, framing the incident as a miscommunication instead of what it really was, a failure of diligence. The word fact-checking suddenly became fashionable again, though only for a few weeks before fading back into lip service. For readers, it was another small reminder to question what we consume. Stories designed to flatter us are often the ones that fool us most easily. We love tales of overnight success because they make struggle seem optional. They're comforting, like financial fairy tales. And when someone promises that the system can be beaten with talent alone, we rarely stop to ask for proof. The irony is that Muhammad had potential. He was clearly intelligent, curious, and ambitious, traits that could have led to genuine success with time and discipline. But in trying to shortcut that process, he discovered the one truth most entrepreneurs eventually face. Attention without foundation collapses. It's the difference between momentum and substance. The former feels faster, the latter lasts longer. In business, as in life, trust is the ultimate leverage. You can recover from a financial loss with time, but a credibility loss can take years, sometimes decades, to rebuild. Every entrepreneur, journalist, or trader operates on that same fragile asset, the belief that they're telling the truth. Once that belief is gone, even your best ideas sound like sales pitches. If there's one universal takeaway from Muhammad's story, it's that credibility isn't glamorous. It doesn't get likes, headlines, or viral threads, but it does something more valuable. It compounds quietly. Over time, consistency outperforms charisma, and in a culture that rewards noise, silence backed by substance is still the smartest investment anyone can make. The tragedy wasn't that Muhammad lied, it's that he didn't need to. His curiosity and enthusiasm could have become real achievements with patience. Instead, he learned too young that credibility, once sold for attention, rarely buys its way back. The markets may forgive risk, but reputation, that's one trade you only get to make once. Long after the scandal faded, one question lingered quietly. Why did so many people want to believe the story? Why were journalists, readers, and investors all so eager to accept the idea of a teenage trader earning $72 million from penny stocks? The answer lies less in Muhammad's actions and more in what his story represented, a collective obsession with the myth of effortless genius. We love prodigies because they make success look simple. They reassure us that greatness doesn't always require decades of work or painful failure. The teenage millionaire, the dorm room founder, the self-taught coder, they're modern fairy tales disguised as news. They let us imagine that the next Zuckerberg or Buffett could appear in any classroom, and maybe, just maybe, that could include us. For the media, prodigies are easy money. They combine novelty, hope, and envy into one neat package. Youth adds credibility, strange as that sounds, because it suggests purity. A young person hasn't yet learned cynicism, so their success feels untainted. It's why headlines about teen inventors and young disruptors never seem to run out of clicks. Muhammad's age wasn't a problem for the story, it was the selling point. But the myth also reveals something uncomfortable about adults, a kind of nostalgic self-flattery. We like to believe that if we'd had today's tools or information when we were teenagers, we might have achieved the same. So when a young person seemingly does it, we project our own ambitions onto them. They become the embodiment of our unlived potential. In that way, believing in them isn't naive, it's comforting. The darker side is that prodigy culture turns potential into pressure. When youth becomes a currency, kids start branding themselves before they've even figured out who they are. The pressure to achieve early has created a generation terrified of being ordinary. Muhammad wasn't chasing money. He was chasing meaning, using attention as a shortcut to significance. That's not greed, that's modern adolescence. Ironically, the same adults who celebrated him were the ones who later criticized him most harshly. They helped build the pedestal, then mocked him for falling off it. It's a familiar cycle in media and business alike. Idolize, monetize, then moralize. The rise is entertainment, the fall is news, and the lesson is always delivered after the damage is done. In truth, the myth of the prodigy says more about society than about the individuals caught in it. It reflects our impatience, our addiction to shortcuts, and our fear of being left behind. We've mistaken early achievement for lasting value, forgetting that real mastery often begins where quick success ends. But in a culture addicted to speed, patience doesn't trend. So perhaps the reason we believed Mohammed's story so easily isn't because it was convincing, but because we wanted it to be. We wanted proof that brilliance still surprises us, that the next generation might do what we couldn't. The prodigy myth survives because it feeds our collective hope. It's just unfortunate that sometimes it devours the prodigy too. Mohammed's story might have started as a misunderstanding, but it unfolded within an economy that rewards exaggeration. The attention economy doesn't trade in truth, it trades in interest. And in that system, hype isn't just tolerated, it's profitable. Every click, repost, and headline builds value, even when the underlying asset is nothing more than speculation wrapped in confidence. Think of attention as a form of currency. The more you attract, the more leverage you gain in followers, opportunities, and influence. That's why influencers, entrepreneurs, and even journalists compete not for accuracy, but for relevance. The logic is simple. If people are watching, you exist. If they're not, you don't. And in a market that rewards visibility, hype functions like free advertising. This is why so many modern success stories sound slightly too neat. The narrative isn't built for truth, it's built for engagement. A teenager turning $1,000 into $72 million isn't just a headline, it's an algorithm's dream. It's clickable, shareable, and emotionally satisfying. Truth, on the other hand, is slow, detailed, and occasionally boring. That's not a good fit for a world scrolling at high speed. Even in traditional business, hype has economic value. Startups raise millions on stories about potential rather than performance. Founders pitch visions, not profits. Investors buy into narratives as much as numbers. It's the same dynamic that propelled Muhammad's myth, a belief that if a story sounds bold enough, it must be worth something. In finance, that's how bubbles form. In media, it's how they spread. The platforms themselves are designed to encourage this behavior. Likes, shares, and impressions operate like micro-investments in perception. The more engagement a story gets, the more it's seen. It doesn't matter whether the engagement is positive or negative. The system treats outrage and fascination as equal forms of success. Attention compounds, and the truth quietly depreciates in the background. In a sense, Muhammad was both a victim and a participant in that economy. His story only became valuable once it attracted attention. Once it did, everyone, from journalists to readers to advertisers, had an incentive to keep it alive. The narrative became self-sustaining, not because it was real, but because it was profitable. It's capitalism's newest trick, monetizing belief itself. It's easy to judge him for exaggeration, but most of us play the same game, just on smaller scales. We curate our achievements, polish our stories, and measure success in views and reactions. The difference is that his version of self-promotion went viral before he had the maturity to manage it. The system didn't corrupt him, it simply rewarded him too soon. If hype has an economy, then attention is its inflation. The more we produce, the less any of it is worth. In Mohammed's case, the currency collapsed quickly, proof that no amount of attention can substitute for substance. But for the media, the lesson didn't stick. The market for exaggeration remains strong, and the cost of truth continues to rise. One of the strangest side effects of stories like Mohammed's is how they quietly devalue hard work. When people hear about a teenager supposedly making $72 million from penny stocks, they don't think about the sleepless nights, the trial and error, or the years of study that real traders endure. They think, why not me? It makes effort look outdated, like an old-fashioned business model. The modern world has turned results into a form of theatre. We celebrate the outcome, not the process. Success is only interesting when it's instant. A teenager who learns to code for 10 years and builds a thriving software company is admirable. But a teenager who accidentally becomes a millionaire from their bedroom, that's news. We've confused patience with lack of talent. Social media has amplified that distortion. It's a platform built for highlight reels, not honesty. The entrepreneur who posts about crushing it rarely shows the failures that came before. The trader posting screenshots of profits never mentions the losses. Mohammed's story was just the logical endpoint of that culture, an exaggerated highlight reel mistaken for fact. In business, there's always been a tension between merit and luck, but what's new is how storytelling has replaced skill as a metric of success. People no longer just work to succeed, they perform success to attract opportunities. Image becomes a strategy. For Mohammed, that strategy worked until someone asked for verification. Then the illusion collapsed faster than it was built. The truth is, hard work doesn't make headlines because it doesn't sell fantasy. It's repetitive, uncertain, and often invisible. Nobody clicks on teen spends years learning markets slowly improves. Yet that's how success actually works, through quiet, consistent accumulation. But in a culture where everyone wants shortcuts, patience has the worst marketing team in history. What's tragic is that Mohammed's original interest in trading was genuine. He really had studied markets, experimented, and tried to learn. But instead of being celebrated for curiosity, he was rewarded for spectacle. The applause didn't come when he learned, it came when he lied. That's how skewed the reward system had become. Authenticity was worth less than attention. This isn't just a media problem, it's a generational one. The more we glorify speed and exposure, the harder it becomes to value long-term growth. Teenagers now measure ambition in followers, not focus. It's not that they don't want to work, it's that the system tells them work without visibility doesn't count. Mohammed didn't create that logic, he just tested it to destruction. His downfall wasn't the death of merit, but a reminder of its fragility. Real success is slow, often invisible, and sometimes thankless, but it lasts. The mirage of instant genius may look dazzling from afar, but it evaporates under scrutiny. The world will always prefer the story of overnight success until it remembers that overnight usually takes years. When the story finally disappeared from headlines, it didn't vanish because people lost interest in truth. It vanished because the media found something else to be interested in. That's how it works. Outrage, fascination, redemption, they all have short shelf lives. The system doesn't correct itself, it just refreshes the feed. Scandals fade, structures stay the same. Within a few months, Mohammed's name had stopped trending. New prodigies, new scandals, and new promises of overnight success filled the space. The very machine that created his fame simply replaced him with fresher material. In the attention economy, yesterday's cautionary tale is just a speed bump on the way to tomorrow's headline. People forget, but the incentives don't. The journalists who wrote the original story carried on with their careers. Their editors carried on chasing clicks. No grand reckoning, no public apology, no industry shift, just a quiet shrug and the next viral moment. The story was treated like a minor glitch in an otherwise successful system, not as proof that the system itself encourages errors of this kind. That's the strange part about media accountability. When something goes wrong, the individual is blamed, not the infrastructure. It's easier to fire one reporter than to question an entire business model built on speed and spectacle, so the machine keeps spinning, rewarding the same behaviors that caused the mistake. In that sense, Mohammed wasn't an anomaly. He was an inevitability. And this isn't unique to journalism. Every system powered by attention behaves the same way. Social media platforms reward the loudest, not the most accurate. Businesses chase virality over value. Even politics operates on the principle that perception beats precision. The algorithm doesn't care whether you're right, only whether you're engaging. The truth is optional, but traffic is mandatory. Media memory, if you can call it that, is conveniently selective. It remembers the drama, not the detail. It turns scandals into entertainment, then quietly archives them once the clicks dry up. It's why the same types of stories, fake prodigies, exaggerated entrepreneurs, overhyped innovations, keep resurfacing every few years. The audience changes, but the cycle doesn't. For Mohammed, that cycle was both a curse and a strange mercy. The same short memory that destroyed his credibility also allowed him to disappear. Within a few years, the internet moved on. The lie that once defined him became an obscure footnote in digital history. But the structure that enabled it, that remains alive and profitable, humming quietly in the background. So when we look back on his story, the real question isn't how could this happen, but why does it keep happening? Because as long as the economy rewards speed over truth and emotion over accuracy, the next scandal is already being written, somewhere, by someone who just wants to be seen. And when it breaks, we'll pretend to be surprised. Again, if you strip away the scandal, what Mohammed really sold wasn't stocks, it was belief. That's the quiet truth at the heart of so many modern success stories. Whether it's a YouTuber promising financial freedom, a startup pitching disruption, or a politician selling hope, the real product is almost always faith, in a future that might not exist yet but feels close enough to touch. The business of belief is older than the internet, but the internet industrialized it. Once attention became measurable, belief became monetizable. Suddenly, the ability to inspire conviction, to make people feel like something is possible, had tangible value. It didn't matter if the idea worked, as long as it sounded like it might. Hope became a service, and optimism became a subscription model. Mohammed didn't invent that system. He just stumbled into it. He sold a dream of teenage brilliance in a world desperate to find it. It was inspirational enough to ignore the maths. Investors, journalists, even readers, they all wanted to believe because belief sells better than skepticism. It's why motivational speakers outnumber accountants online. One gives you hope, the other gives you reality, and we know which one trends. The irony is that belief is a genuine business skill. Every entrepreneur relies on it. You need people to believe before they can see results. Founders pitch visions, creators pitch potential, leaders pitch futures. The problem comes when belief isn't backed by anything. When the promise becomes the product and the product never arrives, you end up with what economists politely call speculative bubbles. We've seen this same pattern in everything from crypto to influencer marketing. The pitch is always the same. Join early, dream big, ignore the details. The modern economy rewards enthusiasm more than evidence. In that sense, Mohammed was just another small player in a much larger game. The same game played by billion-dollar companies that overpromise, underdeliver, and then rebrand. Belief also scales faster than trust. You can make people believe in minutes, but earning their trust takes years. That imbalance is what makes hype so powerful and so dangerous. Once belief goes viral, it behaves like currency, easily spent, rarely recovered. For Mohammed, that currency inflated faster than he could control it, and when it crashed, so did his reputation. Yet, even after his fall, the market for belief stayed strong. Self-help authors, startup founders, influencers, they all thrive on the same emotional supply chain. The lesson wasn't, don't sell dreams. It was sell them better, package them cleaner, use buzzwords like journey and authenticity. The sales pitch never changed. It just learned to sound humbler. In a world that runs on narrative, belief isn't the opposite of truth. It's the version of truth people wish were real. And as long as that wish exists, there'll always be someone ready to sell it. Mohammed wasn't the first to monetize that impulse, and he won't be the last. The business of belief doesn't collapse. It just rebrands. Once the headlines disappeared and the noise died down, Mohammed was left with something most people never have to face: the long, silent process of rebuilding a reputation. It's easy to assume that public disgrace comes with closure, but it rarely does. The world moves on without you, and you're left standing in the echo of your own mistake. For a while, he withdrew completely. The social media accounts that once fueled his rise were deleted. The interviews stopped. The teenage prodigy became just another young adult trying to work out what to do next. But unlike most 20-year-olds, he carried a past that couldn't be explained without an awkward pause. How do you start again when your name is attached to a global hoax? In the years that followed, Mohammed reportedly returned to studying finance properly, this time quietly, without the headlines. He had always been interested in markets. The lie had simply drowned out the truth of that. It's a strange irony. The myth that destroyed him was born from the very passion he was trying to prove. Beneath the exaggeration was genuine curiosity. Reputation, once broken, doesn't rebuild itself. It needs time, humility, and a degree of public indifference. The good news for him was that the internet's memory is short. New scandals came, new names replaced his, and slowly the noise surrounding him faded into a kind of digital dust. In the modern world, obscurity can be the most merciful outcome. What lingers, though, is the internal rebuilding, the slow, uncomfortable work of redefining success. For someone who'd been known as the millionaire teen, learning to value ordinary progress must have been disorientating. But maybe that's what maturity really is: learning to live without applause. Fame teaches you how to be seen. Failure teaches you how to stand when no one's watching. There's something oddly freeing about being publicly wrong. Once you've lost the illusion of perfection, you're no longer burdened by it. For Mohammed, that meant rediscovering the part of himself that wasn't chasing validation, the quiet learner, the kid who actually liked the complexity of markets rather than the simplicity of headlines. That's a much harder success story to sell, but a far more sustainable one to live. It's tempting to turn his story into a redemption arc, the fallen star who learns humility and rises again. But perhaps the more realistic ending is quieter. Maybe he doesn't need to rise again. Maybe the point is that he grew up. In a culture obsessed with comebacks, simple growth looks radical. There's strength in not needing to be remarkable anymore. And maybe that's the real lesson hidden beneath the spectacle, that the end of a public myth doesn't have to mean the end of a person. Sometimes the best comeback isn't a return to fame, but a return to honesty. After all, once the cameras move on, the real work begins. And this time, it doesn't need to be seen to be real. If you zoom out from Mohammed's story, the most uncomfortable truth isn't about him at all. It's about everyone who believed it. The teenage millionaire myth didn't spread because one kid lied. It spread because people wanted it to be true. It confirmed a fantasy we've been sold for decades, that success should come fast, easy, and preferably before your A-levels. It's easy to point at him and say he was naive, but really, we were too. Every generation has its version of the overnight success myth. In the 90s, it was dot-com millionaires. In the 2000s, app founders. Now, it's crypto bros and influencers. The tools change, but the dream stays the same. Skip the struggle, get the reward. It's capitalism's most seductive bedtime story. The reason that story keeps working is because it hits something deeper than greed. It appeals to hope, the belief that maybe, just maybe, the system isn't rigged after all, that someone young, clever, or lucky enough could still beat it. Mohammed became the stand-in for that fantasy, even if only for a week. We didn't just want to read about him, we wanted to be him. And that's why the media didn't check the numbers, why readers didn't ask for proof, because the idea was too satisfying to challenge. It's a pattern we see everywhere. from investment bubbles to viral self-help trends. When something feels good to believe, we stop looking for reasons not to. Confirmation bias isn't just a psychological quirk, it's a business model. If you strip it down, his story shows how markets and media run on the same emotional fuel, optimism. The stock market thrives on confidence. Journalism thrives on clicks. Both reward stories that make people feel good about the future, whether it's rational or not. And when that optimism turns toxic, the crash always looks unforeseeable, even though it was written in plain sight. There's also a quiet lesson in accountability here. Everyone gained something from his myth. The magazines got readers, the public got entertainment, even Muhammad got his brief taste of power. The only thing missing was truth. But in an economy where truth doesn't trend, it's not hard to see why it gets left out of the deal. The irony is that we keep demanding authenticity while rewarding exaggeration. We want transparency, but only if it's flattering. We criticize lies, yet share the ones that inspire us. Muhammad's story is a reminder that our outrage often arrives too late, once the damage is done, and the next fantasy is already loading in the background. So maybe the real takeaway isn't about journalism or markets or teenage ambition. It's about us, about how easily belief can be bought when it's dressed up as hope. The kid who beat Wall Street didn't really trick the system. He just showed us how eager we are to be tricked. So, did the kid really beat Wall Street? Not even close. But in a strange way, that's what makes his story so valuable. Because while he never mastered trading, he exposed something far more important. How easily we all confuse visibility with success. How quickly we mistake confidence for competence. And how a good story told loudly enough can outpace the truth, at least for a while. When Mohammed Islam claimed to have made $72 million, he was really holding up a mirror to the culture around him, a world that celebrates the appearance of wealth more than the process of earning it, a society where teenagers grow up thinking millionaire is a job title. He didn't just invent a lie, he reflected one that was already everywhere, polished and profitable. Over the course of this story, we've watched a perfect modern parable unfold, a rise fueled by belief, a fall caused by exposure, and a lesson that outlives both. Muhammad wasn't the villain, he was the symptom. He showed how ambition without grounding can turn into illusion, and how media without verification can turn that illusion into news. It's both tragic and predictable. In business, as in life, the real wins rarely make headlines. They happen slowly, quietly, in rooms no one is filming. Real success takes longer than the internet wants you to wait. It's measured in habits, not headlines. Consistency, not clicks. And that's something every entrepreneur, investor, or curious teenager should probably write on a post-it note somewhere. The fascinating thing about this story is how small it really was. One high school rumor spiraled into a global myth, all because it sounded like something we wanted to believe. That's how fragile truth can be in a marketplace built on attention. It doesn't need to be hidden, just slightly less exciting than the lie sitting next to it. But there's still something to admire in the ambition, misguided as it was. The belief that a teenager could beat Wall Street, that alone speaks to human optimism. It's the same spirit that builds companies, starts movements, and keeps people dreaming. The trick, of course, is learning to aim that optimism at reality instead of fantasy. If there's one final takeaway, it's this. The greatest skill in business isn't spotting opportunity, it's recognizing delusion, knowing when confidence becomes self-deception, when hype replaces honesty. Muhammad Islam's story is a reminder that success built on illusion collapses the moment someone checks the maths. And yet, even knowing that, part of us still hopes the myth was real. Because deep down, we all want to believe the kid who beat Wall Street existed. It's comforting to think brilliance can appear overnight. But the truth, as always, is slower, messier, and infinitely more human. And maybe that's the version worth believing in. And that brings our journey to a gentle close. If you're still with us, you're welcome to drift off with another of our sleepy deep dives. Until then, rest well and good night.